are you? I am super, ooper, duper excited to share with you this episode. On this episode, we're going to have an opportunity to talk to a specialist that really knows what he's doing with commercial lending. How many of you have ever wanted to fix and flip? How many of you have ever wanted to purchase anywhere between 1 to 4 units to be able to build financial wealth, not only for you, but for generations ahead? But we're going to talk about that today with Mr. Tubbs. Stay tuned. You do not want to miss today's episode. All right, you guys, I am super excited to bring on my co-host today. Hello, Mr. Benjamin. How are you?
I'm doing great. How are you today?
I am good. I am good. Thank you so much for joining me today on RoQuanda's Real Estate Real Talk. I am super excited to have you here. So for all of those individuals that are watching us today and will be watching us in the future, tell them who you are.
Hello. It's nice to be with you guys today. This is a great opportunity to talk to you guys. I'm Benjamin Tubbs. I'm the Vice President of Operations with Residential One Ltd. We're a commercial mortgage broker, and we work with lenders nationwide to find investment customers, the type of programs that they need to get their deals funded and moving forward.
Awesome. That sounds exciting. So tell us a little bit more about your company, how long it's been in business, and basically how many people do you guys service on an average?
Okay, well, Residential One has been in business for about 7 years. And on an average, we probably do somewhere in the neighborhood of about $5 to $10 million a month in commercial real estate mortgage deals. So on an average, that's probably somewhere between 10 to 15 customers a month.
All right, so 10 to 15 customers a month. That's perfect. So when we talk about commercial lending, there's so many different things that go up under that title of commercial lending. And some people get confused by it. And it does include like the storefronts and stuff like that. But tell us, what do you specialize when we're talking about commercial lending?
Okay, great. That's a great question because there are a lot of different areas of commercial lending. But we specialize in basically flips and fixes for 1 to 4 unit properties. We do a lot of renovation loans. We have a wide variety of different programs to offer different lenders depending on their experience level. Also, we do a lot of large multifamily purchases and refinances, cash out, bridge loan. One thing that's really good about us, there's no income verification. We're very rarely asked investor to see their income. However, we do normally see their entity docs, their EIN letter, those type of things there to verify that they are a business entity. The other thing that's unique about us, we only loan to entities. We don't loan to individuals. You have to be a business, a limited liability company, a partnership, an S corp, a corporation, something to that degree. And also it's basically asset-based lending. We're looking at the asset and the project. We're looking at, does it make sense? Do you have the right rehab budget? Do you have the right contractors to get the job done? And if you don't have all those things in place, if you're a new investor, we have those type of outlets as well for contractors, as well as design people, architects, and those type of things there to help you get your project moving forward.
All right, you said a lot just then. Okay, so let's just break all that down for those individuals, because we have those individuals that know exactly what they're doing. And then you have those individuals that want to get into the market that have no idea where to even begin. So let's back up a little bit and break down what you said. So if a person like myself is interested in deciding that I want to purchase a home and I want to fix it and I want to flip it and put it back on the market, I have to have a LLC or a corporation or some form of letter stating that I do have a corporation. Is that correct?
That is correct. And
Okay,
I can
perfect.
kind of
With
give you
a EIN number.
with
Now,
the
do I
EIN.
have to be in business for a certain period of time? Do I have to have an existence 2 years or more, or can I be a brand new business that's just starting out?
You can actually be a brand new business because a lot of our investors, they buy various different properties. Sometimes they actually use a different entity for each property, or they might have different partners on different deals. So it's okay to be a brand new business because what they're going to look at, even though you're a brand new business, they're going to look at your real estate experience as an investor. So maybe it's a brand new business, but you've had previous experience owning and buying and flipping other properties, or either you've had rental properties. They're going to take that into consideration. Two things that the type of lenders that we use really like, they really love to see that you have some type of experience.
Okay.
However, if you don't have the experience, we still have programs that suit their first time flipper as well, or first time investor.
Okay, perfect. So I'm an educator, so I like to recap. So we're looking at that brand new individual. Trying to put my hand up. I can see
Okay.
that brand new individual that has never flipped before, never done anything before, never been a landlord before. You have a program for them. And then you have another program for an individual that has been a landlord. Say, for example, they bought their first home and it was a small home and they've upgraded or decided to downgrade. And instead of selling that home is now a residential income where they're now a landlord. So those are two different programs. Trying to put my hand.
Right. Two different programs.
Two different programs based off. I'm trying to get over so you can see me. Okay, two different programs based off of what type of lender. Now, when a person comes to you and say, "Hey, Mr. Benjamin, I want to now become a landlord. I want to go ahead and jump into the market." Regardless if they are seasonal or they're brand new, what documentation should they have in place when reaching out to you to say, "I'm ready to now get into this fixing and flipping"?
Okay, that's a great question. First thing they have to do, they have to have their articles of corporation or their registration from the state that they're in showing that they're an entity. Also, once you get that, you need to apply for your tax ID number through the IRS. So you need to have a letter, not just the number. You have to have the letter from the IRS stating your tax ID number and the name of your entity. The other thing that you'll need in place is a purchase contract. And if there's any renovation or anything like that that needs to be done to the property, you're going to need a rehab budget or a
Okay.
construction budget.
A
And
construction person. So you basically will have to start putting together those individuals that you would use either for roofing or electrical or plumbing so that you have those people that you can present that this will be the team of people that you're going to work with. Is that what you're looking for?
um, well, if you have a general contractor, you just need to be able to present that general contractor, and then they're going to go off of him and then trust that he's going to hire the right people because he is a licensed contractor.
Okay.
So he's kind of like the fiduciary person to make sure that the project gets done the right way. So
Okay,
if you have a
perfect.
general contractor, you just need to verify that general contractor. Now,
Awesome.
depending on the rehab size, sometimes you're not necessarily required to have a rehab budget. But in that case, what they'll do a feasibility report. They'll look at your rehab budget that you submitted based on the scope of work that you say you're going to do. And what they do, they analyze that construction budget to make sure that there's actually enough money in there to do exactly what you say you're going to do.
So let's put a pin right there. When you're talking about construction budget, for a person that's just starting off, what is an average that it would need for a construction budget? We're not even talking about closing and stuff like that. Just for construction budget, how much would they need to be able to present to you as a lender in order to qualify for the loan to
Okay.
purchase a
Well,
fix and flip?
Well, it also, again, we have a wide variety of different lenders. So most of the time they're focused on the asset itself. Does the project make sense? So as far as verifying income or verifying money to close or that type of thing there, they really don't do that. Some of the lenders don't verify anything. They just verify the project itself. They look at the rehab budget. One a term I'm getting ready to give you that's very important for an investor is after repair value.
Okay.
Everything is based on the after repair value. That's what the house is going to be worth once you fix it up and once you renovate it. And that's
Okay.
going to be based off of your rehab budget and the comps that are in the area. So hypothetically, let's say we have a property that's $300,000 after repair value. That's what it's going
Okay.
to be worth. The lender is going to loan anywhere between 70 to 75% of that after repair value. So
Okay.
hypothetically, if it's a $300,000 after repair value, and your 70% of that would be $210,000. So, for example, if you buy a property, say for $130,000, and then it's $210,000 is the what they'll loan, you got that difference between the purchase price and what that 70% of the ARV is. That can kind of help you determine how much money you can use for the rehab. So in that particular case, you would have about $80,000 that you could allocate toward that project for rehab.
That's really good. Very, very interesting. Okay, perfect. So my next question would be, I guess it really doesn't matter, but I'm going to still ask that question anyway. Is there a minimum of a credit score that a person would need to have when they're coming to you?
That's a great question also. The minimum credit score on this type of programs are typically right around 600, a little bit lower than what it would be if you
Wait. You said 600?
600 because
that's lower than buying a
regular property. Exactly.
A regular property for you to move in. So I can buy, okay, let's just skip 1 second. I'll come back to that. I can buy a 1 to 4 unit, okay, for with a credit score of 600,000. Can I possibly live in one of those units? Would that be okay?
Well, technically, you can't buy these properties as an owner-occupied property.
Okay.
So, I mean, I have had a lot of investors who initially would go in and actually take out a fix and flip loan. And then the house comes out to be so nice, they decide they want to keep it and not sell it and live in it. At that point there, all you would have to do is refinance it into your name out of the construction loan into a conventional loan. So technically, you can't get a loan as an owner-occupied property, but after you renovate it, you can pretty much do what you want to do at that point.
Okay, perfect. All right. So sorry for disturbing you about the credit score. So let's go back to that. You said minimum.
I want to kind of reiterate about the credit score real quick. One of the things that's really important that they look at more so than the credit is the experience. And again, these programs are geared for investors, for real estate investors. So a lot of times they realize that investors, you know, sometimes they carry high debt because they might be in the middle of a renovation. And some of these renovations is as much as $150,000, $200,000. So a lot of times they realize that your credit cards are going to be maxed out. You're going to be in a little bit of a debt until your project gets done. So they're not looking so much at your credit. They look at more so at your experience and your ability to get the project completed.
Wow, that's great information to know that. Awesome.
Okay.
Wow. I'm just like, I have a flood of questions.
Oh, no problem. I'm here to answer as many as I can.
All right. So, all right, I'm recapping because I want to make sure I have this. So a person can basically come to you and say, Mr. Tubbs, I am ready to jump into the market. I am looking for a 1 to 4 unit, or I'm looking for a possible fix and flip. They have to have, there's different programs, of course, to qualify for. They can either be a brand new person that have no experience whatsoever, or a seasonal person that has been a landlord. That person, again, they have to have a minimum of 600 credit score, depending on the different loans. And from that point, each person is looked at individual, and their cases is individual. When you're looking at purchasing commercial properties. Is that correct?
That's correct. And typically, to just kind of give you some parameters, typically on a fix and flip loan, you're looking at putting down 20% of the purchase price. Okay, so for example,
my next question. Okay, good.
20% of the purchase price, and typically the lender will loan 100% of the rehab. So in that one scenario that we were talking about, so let's say you buy a house, it's $100,000, you got $80,000 rehab budget. So if you're a first-time buyer, as long as the ARV and all those numbers fall in the right way that they should. If you're a brand new buyer, you're normally gonna put down 20% of that purchase price. So that would be $20,000 and $100,000 purchase. But that rehab money, they're gonna give you 100% of the rehab, so that would be $80,000 that they would set in an escrow account. Now this is based on a reimbursement, and this really comes in. I mean, investors that are normally used to paying everything cash, and they really love these programs because now you can do a lot more with your money. So, for example, let's say in that same scenario, you got a $20,000 down payment, and the lender's going to put the remaining $80,000 to do the rehab in an escrow account. As you complete that rehab, it's all based on a draw based on reimbursement. So as you complete that rehab, you call in for an inspection. They come out and inspect the scope of work that you've completed, and based on what you submitted on your rehab for that cost, they'll wire you that money within 24 to 48 hours.
And the money's wired directly to you, or is it wired to the contractor?
It's wired directly to the entity that owns the property, not to the contractor.
That owns the property.
And I do a lot of flips and fixes myself. I probably have done 10 in the last couple of years. And most of the lenders work pretty much the same. It's normally you call in for a draw. Say if I call in for a draw on Monday, on Wednesday, they'll typically have an inspector out to inspect. On Thursday, he'll submit his report to the lender. On Friday, you should be expecting a wire. So it's a pretty quick turnaround, about a 3 or 4 day turnaround from the time you apply for the draw and the time you actually receive the wire for the funds for that draw.
Okay. So on top of the $20,000 that you put for a down payment, what is a person expected or should expect to pay for any additional fees?
Okay, so you're gonna have your down payment, and typically you're gonna have about 4 points in these loans. Typically
4 points for each loan. Okay.
Yeah, 2 points.
Okay, break that down, because you have people that have never purchased before. So you and I know what that means. So what does that mean for a brand new person that's looking to jump into it?
The lender has a fee for doing the loan, and the broker has a fee for the customer. Typically what happens, the customer will come to the broker will replace it with a lender. So the lender is going to charge 2 percentage points of the purchase price, or actual loan amount, because not just the purchase price, because you also have the rehab in there as well. So whatever the total loan amount comes out to be, purchase price minus down payment plus rehab, you're going to pay 2 percentage points of that to the lender and 2 percentage points of that to the broker.
Okay.
And some lenders will allow you to finance those fees into the loan, so you're not actually having to bring it out of pocket. And some lenders won't. They'll require you to actually bring the down payment plus all your closing costs to the table. Now, the additional costs outside of the mortgage broker fee and the lender fee and the down payment is, of course, your title costs, your homeowner's insurance, and any tax liability that you might have.
What about if we're talking about a home loan? Most people are used to having a home inspection and an appraisal. Do they have to have that, and are they responsible for that?
You have to have an appraisal in most cases. Some lenders work off of a BOP or like a drive-by. Some lenders, they rely more on the feasibility report, which is going to determine, do you have enough money to actually do what you say you're going to do. And the reason why some lenders, they go without the appraisal because they realize that it's somewhat subjective. One appraiser might come in with one number and another appraiser might come in with another number.
We see it all the time.
See it happen all the time.
Yes.
And I really appreciate one of the lenders that we deal with, because they don't look so much at the appraisal because they realize that it is subjective, and they go more off of the feasibility report and your experience, and they look at the appraisal, but they don't put 100% weight on the appraisal. Because I've had situations where the appraisal might have came in a little low, and we looked at it and said, well, this property is a little unique. It's going to be a little bit different. So they look at the feasibility report. They say, yeah, we agree. We don't necessarily think that the appraisal is as accurate as it should be, and they'll they'll go with the number based off the comps or another evaluation that they'll take into consideration. So the appraisal is not like in a residential deal. Typically, an appraisal is
a deal breaker.
It's a deal breaker. Not so much in the commercial business. You got a lot more. You got a little more flexibility.
Okay, that's good to know. So my next question would be, right now, Airbnbs are very popular. Can a person reach out to you and say, Mr. Tubbs, I would like to go in and get a property for Airbnb? Can they use this type of lending to be able to purchase a property?
Certainly, and I have a lot of customers that do that. They'll go into a flip and fix loan, and after they fix and flip it, they'll refinance it into a permanent loan, and at that point, you can make it a rental, an Airbnb, or whatever you choose to do with it as an investment property.
Okay. Now, when you say flipping it to another loan, what does that entail? Do they have to now get their credit up to a certain level for another loan? What does that look like?
Okay, well, yeah, let me explain that a little bit more. These loans are typically 12-month loans. They're a short-term loan. They're not for you to, the investor, the lender, they want you to get the loan done as efficient and as precise as possible. So typically the loans are 12 months, 18 months at the longest, 6 months at the shortest. So normally between 6 and 18 months. I typically don't like to put an investor on a 6-month loan, especially if they're a brand new investor, because you never know what comes up. There's always
you never know what's going to happen until you take.
Yeah, I don't think I've ever went into a rehab loan and some contingency didn't come up that I wasn't expecting. So I typically don't like, unless they're a real experienced investor and they have their construction crew on point, then I'll explain the benefits, the pros and cons of the 6-month program. But typically, I like to go with a 12-month program because that gives the investor time to get the deal done. But one of the things that you have to take in consideration, and the lender also takes in consideration when they're looking at the profitability of these loans, is the debt service. How long is it going to take you to get to rehab? Because the difference in 6 months and 12 months could be a difference of $15,000 in debt service, which would reduce the profitability of the loan. So there's a number of different factors that you have to look at, but typically you're looking at anywhere between a 6 and an 18-month loan, ideal 12.
Okay. And also too, I know you probably came across this, but what happened if the project is not completed within that time frame? What does that look like for a brand new person that's liking to venture into this?
Okay, well, what happens at that point, at that 12-month point, they're normally build in about 90 to 120 days worth of extensions. Okay. But what happens after you get to that 12-month period, each extension is going to cost you. Like that extension might cost you an additional 1% of the 1% of whatever the payment is. Let's say the payment
is that 1% factored into your new mortgage, or that's something you have to pay once the deal is done?
You can do it either or. You can pay it into the mortgage payment, or you can just pay it at the end of the loan when you sell the property or refinance or whatever the case might be.
Oh, that's good.
Yeah. And I actually have one lender which I like to use because they have all deferred payments. One of the things a lot of investors don't like having to do is pay mortgage payments in the middle of rehabbing the loan. Exactly. So I have one lender that will defer all the payments until the end of the loan. So when you pay off the loan, you just pay whatever mortgage payments were due that you didn't pay. For example, like let's say your mortgage payment is $1,200 a month, and it took you 6 or 7 months to rehab the property. So each month there was a mortgage payment for $1,200 that was due, but you're not required to pay it. It's deferred. So at the end of that term, whatever your balance is on that loan, they're just going to add that additional interest onto the payoff. Now, some people would like to pay it so that interest doesn't add up. But for me personally, when I'm doing a rehab, all I want to focus on is the rehab. I don't really have to want to worry about making the mortgage payment until the house is sold. And that way also it helps me to determine a little easier how much I actually spend on this project, because now all that that debt service is on the end, so it's all bundled into one number.
Okay.
Does that make sense?
So I have another question for you. So everyone know recently from being on the news how Zillow purchased a lot of properties. They call themselves fixing them and flipping them and putting it back on the market. And that caused them a lot. They lost a lot of money. Individuals wanted to know, is now a good time to possibly start looking at it? Or are you just going to be on the market looking for great deals to come up? And how do you know if it's a great deal? I'm going to give you the mic for this.
I think on that question there, I think it kind of depends on what market you're in, because some markets are better than others. And you want to be in an area where there's a lot of renovation going on, and where you see gentrification taking place, actually, where you see old neighborhoods that were maybe at one time not so affluent. Now you see that there's new structures and new neighborhoods coming up around them, and you see people moving in on a very large scale. Those are the areas that you want to be in. I mean, there's certain cities that are better than others, or certain markets that are better than others. And when you're an investor, you can't just say, "Hey, I'm gonna go buy a house and flip it." You got to really do your research. You got to see what the houses in that area are selling for, what's causing the influx of people, and what's actually going on in that particular market.
The key word you said there is research. And a lot of times people don't want to take the time to do the research to see, and then it just doesn't go the way that they planned because they didn't take the time to do the research. I think that is a very important word that we should always highlight, is research. And I say that to, buyers, regardless, even sellers. You always want to do your research so you know what you're getting yourself into. Right. All right. So my next question would be, what are we looking at right now for interest rate? If I wanted to jump into this market, what would that look like?
Well, typically on these fix and flip loans, again, they are a short-term loan. Typically, you're looking at rates which might seem kind of high compared to what residential rates are now, but for investors, I mean, it's pretty good rates, anywhere between 8 to 10% interest only. That's what the rates. Yeah, 8 to 10% interest only. That's pretty standard. Now we do specialize in some other areas. I know we were talking about flips and fixes, but if you're looking at rental properties, if you're just doing it to rent a property, or multi-families, you could be as low as the 4s. You could be in the 4s. If it's a bridge loan or cash out refinance on a rental property, long-term loan, you can be anywhere in the 4s to 5%. But on these short-term fix and flips loans, 6 to 18 months, you're looking at about 8 to 10% interest only.
But the great thing about it is that when you're doing the commercial loan with the fix and flips, the rehab finances is put into an escrow for you to be able to help you. So that means that you're not coming out of your pocket for those repairs, which is really good compared to if you were to go the other route. If I'm correct, you would need to have the finances to do the repairs yourself.
Exactly. And I've worked with a lot of investors that, were used to buying a property and, spending, their own hard-earned cash to do the rehabs. Okay. And now that they're doing this, they can buy a lot more properties. For example, when you're paying cash for a property that might be $150,000, you could take that same $150,000 and buy 3 or 4 properties and expand your profitability considerably.
Exactly, because I know of people that own properties that they want to sell it to get the finances for it to buy other properties or do other things. So with this program, it allows you the capabilities, like you're saying, buying more than one property.
Exactly.
And then taking care of it and really building your financial wealth, basically using the bank's money to get your house up and going.
I wanted to stress one thing that you had mentioned earlier about research. If you're going to be a real estate investor or a flipper, you have to be willing to sit down and do the research. You just don't want to jump out there and just buy something because you've seen the neighbor or somebody did it. You need to really do your research. The other thing is you need to make sure you have a good real estate agent on your side also.
I know a good real estate agent.
because she can help you. She can help you do some of that research and tell you what the comps in the area are, and be able to help you make the best decisions. So you don't want to
That's
just run.
important too. The
It's
comps are
very
really
important.
important. The numbers does not lie at all. So being able to pull up the comps and see what the properties are selling for, and then not only that, but what the properties are renting for within that area. Because a
Exactly.
lot of times people expectations does not meet the numbers.
Exactly. Exactly.
Does not meet the numbers at all. All right, perfect. So let me see if I asked all of my questions. Is there anything else? I think you answered a lot of the questions, joint together. But is there anything else that a person should know? Just to recap, a person could be brand new and decide that I want to jump into this fix flip type thing, or they can have experience. They
Well,
need to have at least 20% down. It does not cover their closing costs and all the other stuff. All of that vary. If the house needs to be rehab, um, the bank will basically hold the monies for the rehab, and then it will be draws based off of what needs to be completed, based off of
what,
inspections and stuff like that.
what,
And this
one thing.
is a short-term loan, 12 months. So you have 12 months from the time that you purchase, rehab, and then put the house back on the market or something like that. Is that correct? Did I say everything
That's
right?
correct. Yeah, one thing I do want to kind of clarify. It's a reimbursement loan. So what happens is you have to spend the money first, and then once you spend the money to say, for example, you have windows is 5,000 and doors is 2,500, and you got framing or whatever. You have to go out and actually perform that work and get that work done. And then when the inspector comes out and inspect that work has been completed, then they're going to reimburse you based on what you put on your initial rehab budget. I see
Perfect.
a lot of customers think that as soon as I close this loan, the bank is just going to give me $80,000 to start my rehab, and I can just run through it like I want. It doesn't work quite that way. You have to do the work first, and then the bank will reimburse you based on what you put on your rehab budget.
And
Now
that's
there
why when
are
they release the draws to the owner of the property based off of that.
right, and the
I
other
got
thing
it, Mr. Tubbs. I
now
got it. I got it.
there are some things that you can do to kind of help recoup that cost in the beginning because you have to buy the proper type insurance, which is reimbursable. Your plans that you have to pay for that you had someone sketch or draw up is reimbursable. Also, uh, any blueprints or anything that you had to do to prepare to get the job done is reimbursable. So what happens a lot of times, what a lot of my investors will do, they'll build that soft cost into their rehab budget. And the
Okay.
same day that they close, before they even do any work, they put in a draw the next day for that soft cost that they already spent to prepare the property to be rehabbed. You follow me? Like your homeowner's insurance, your blueprints, any sketches that you had to be done, any consultations that anyone had to do with you about the property. You can put all that on your rehab budget and be reimbursed on that as soon as you close the initial loan. I just
Wow.
gave you
This
an
is
example.
great information. Awesome, awesome, awesome. Is there anything else that you want to tell our viewers? We have several people that are jumping on and off. Just one more golden nugget. What would you tell them that I
Okay.
did not ask? Because I don't know what to ask, but
Okay. One
tell
other
me.
thing that I wanted to bring up too that we do offer that I kind of forgot about. I think I forgot to even tell you. So we have a really great ground up construction program
Okay.
for builders. If you want to build a 1 to 4 unit investment property, uh, we have a program where they'll allow the money that you spend on the land as your down payment. So, for example, let's say you bought a piece of land, is you paid $50,000 for that land, and you have a new build construction that you want to build and sell. So, let's say the ground up construction is going to cost you $400,000 to build.
Okay.
Typically, they want 10% of that down cash. They want to see that you got 10% invested into the project.
We're only dreaming.
So what happens is, I'm gonna have to wrap this up here in a second. But what happens is they'll use the money that you spent to buy the land as your down payment. So you can actually do a ground up construction without having to bring any money to the table if you already own the land. So that's a really popular program for us as well.
That's awesome. Well, thank you so much for your time. I know that you're
Great.
absolutely busy, but just wanted to go ahead and give everyone your phone number. It is on the monitor, so they can go ahead and reach out to you. And then also to your email address. Feel free to reach out to him, let him know that you saw this video on YouTube and Facebook just to get some more information.
Okay.
So
can I give you my website address as well?
Go ahead and give that to them. What is your website?
It's a residential one spelled out, ltd.com. So that's residential1 ltd.com.
Awesome. All right, Mr. Tufts, thank you so much for your time. I greatly appreciate
great.
it, you guys.
Thank you. Thank you for having me.